Welcome, everybody. Today we have for you Jeremiah back. Jeremiah is a Morningside grad. I'm going to let him introduce himself specifically, but he works for Security National Bank and has since he graduated. So he's going to talk to you guys about building and maintaining your credit. He has a short presentation, and then if you guys have any questions, put them in the chat, and we will make sure that we address those when we get done. So I'm going to let you take it away, Jeremiah.
Perfect. Thanks, Stacy. Yeah, like Stacy said, my name is Jeremiah Back. I work downtown at Security National Bank as a retail banker. I have been with Security National Bank since I graduated Morningside in 2016. It's kind of crazy to think that it's already been 4.5 years. Time's flying. But yeah, so 4.5 years in the retail banking world has given me a lot of time to really see and make credit decisions based on consumer credit reports that I see. So I've been able to gain a lot of experience in retail credit, consumer credit specifically, and looking at a lot of credit reports and making decisions based on that. Now, we're going to specifically talk about credit today. There are a lot of different things that go into a loan decision. So don't get wrapped up on credit being the only thing. There are a few different things, but we're just going to dive a little bit farther into credit specifically. So how do you get credit? So you have to start somewhere, usually small. And when I say small, I mean like a small line of credit or a small personal loan. Usually you start small because creditors, which are financial institution, people making decisions for you, or people making decisions based on your loan application, look at credit, and it's kind of a catch-22 because you have to have credit in order to get credit, if that makes sense. So if you don't have credit, we usually require a co-borrower, also known as a co-signer, if necessary. And in order to actually get credit, get a loan, you have to apply through a financial institution. For revolving lines of credit, we do look at, or you do have options through like big box stores such as your Shields, your Walmart revolving credit, or excuse me, Walmart charge cards, et cetera, et cetera. And then there are also installment loan options. These are your loans that you pay on a monthly basis. It's usually the same amount each month. Same payment, same interest rate, unless you get into, an adjustable rate loan. These installment loans are known as personal loans, auto loans, mortgages, etc. How do you keep good credit? I did all caps here and I said pay your bills, and it sounds simple, but sometimes even for people making credit decisions like myself, it's pretty easy to get caught up in, well, these people are late, and these people are late on their payments, and they just, it's pretty easy to look past things that happen in life. And one of the number one things that I learned early on was that life does happen, and there are reasons for late payments or derogatory credit. And in order to keep good credit, it's very important to not fall into that cycle of derogatory credit with 30, 60, or 90-day late payments, or collections, judgments, or bankruptcy. So what a collection is let's just say you have DirecTV and you go to disconnect your DirecTV and you forget to pay the last bill. Well, DirecTV will send you a bill and send you a bill and send you a bill, and maybe on the third or fourth time they deem that bill as uncollectible, and they send it to a third party, which is a collection agency, and that reports to your credit as derogatory credit until it's paid. And that will stay on your credit for an extended period of time, depending on the severity of it. Usually I say it's around 5 to 6 years that it'll stay on your credit. Judgments are when someone files a lawsuit against you, someone, so to speak, sues you and goes to court, and a judge says that you owe this person money. Sometimes if, a credit card bill that's outstanding that has fallen delinquent and not been paid, if it's big enough, that'll go through the courts, and it'll be a judgment on your person. So that'll be on your credit report. Once again, it's until it's paid, and probably for 6 to 7 years after. Bankruptcy, there's a lot of intricacies to bankruptcy. There are different bankruptcy chapter protections, and they're for different reasons. So we won't get into the weeds, so to speak, on that. But bankruptcy is one of the most severe forms of derogatory credit, and we do say that it stays on your credit for around 7 years. Now, bankruptcy, from a standpoint of a banker, we do require reestablished credit for at least 2 years after bankruptcy. So once bankruptcy is filed, and we do usually say this is a Security National Bank policy, but we say 5 years after that is when we can start extending credit to that borrower again. And we do like to see at least 2 years of reestablished credit in that meantime. And there are a lot of different factors that go into decision making. So once again, if you do file for bankruptcy, that doesn't mean you can't get credit in the future. It just means it just makes it tougher if you have any of these forms of derogatory credit. How can someone move from bad credit to good credit? So when someone has fallen into the cycle of bad credit or struggling to pay their bills, I'm sure it can seem very difficult for that person to get back on track. But it's very important that you focus on paying off debt. And I usually advise people to pay off debt from the smallest credit line to the biggest credit line, so that once your smallest derogatory credit gets paid off, you just work on the next smallest and work all the way up to the biggest, if that makes sense. If you fall behind, work on being able to stay current. So it's very important to not fall 30 days late on any of your payments, because this is when it does start to report adversely to your credit. So on all credit reports, there are fields for 30-day late payments, 60-day late payments, and 90+ day late payments. And obviously, the longer that you go on a late pay, the longer your bill stands. The longer you go without paying your bill, the more adverse it does affect your credit. And once again, time. So time is a big factor in credit. In your credit score, number one, because it's very important so let's just say you have bad credit, and then you get all of your derogatory credit paid for, all of your collections, all of your judgments. Once that point in time happens, and then from that point on, the more time you go from your derogatory credit and having all your bills paid as agreed, the more it will improve your credit in the long. And then month after month, as your credit starts building up, your score will just jump up and up and up. What counts toward your credit score? There are 5 things that really factor into your credit score. Number 1 is your payment history. Number 2 is your amounts owed, and we'll dive into each one of these here in a second. Number 3 is your length of credit history. Number 4 is new credit, and number 5 is types of credit in use. So payment history, that's pretty cut and dried. It's are you able to make your payments? Have you been 30, 60, or 90 days late in recent history? Also, another thing on your credit report is it does say each month that you are 30, 60, or 90 days late. And obviously, the longer, like I said earlier, the longer you go from that date of your last late payment until current day, the better it's gonna look on your credit. Amounts owed. So the biggest thing one of the big factors in your credit is amounts owed. And when I say that, I mean on your lines of credit, like your credit card, it has a limit. Now, your limit doesn't mean that that's how much you owe each month. Well, let's say you have a $2,000 limit on your card. Or actually, let's just say 1,000 to keep it simple, round numbers. Let's say you have a $1,000 limit on your card. I usually advise customers to never go over 30% of that balance, so $300, and try to pay it off every month if you can. So I say 30% because that's that optimal, like teeter-totter limit where it optimizes your credit the most. Now, if you can, absolutely, I would advise to pay them off every month. But once again, I understand life happens and sometimes you have to put things on credit. So once you start getting past that 30% mark, that's when it doesn't really help your credit, but it might look worse on credit, and it might drive your score down a little bit if you do get to a point where you're itching closer to that credit limit. Length of credit history, that's a big thing as well. So what we look for at Security National Bank is at least 2 trade lines. So either 1 credit card and 1 installment loan to make 2 trade lines, or 2 installment loans, or like a mortgage and a credit card, etc. Really, any 2 types of credit for a length of 2 years. So 2 years each credit line, or each trade line, excuse me, for a total of 48 months or 4 years of credit history. New credit. So credit reports are kind of cool in a sense that it tells whoever pulled your credit, the bank that you applied at, how often you've had your credit pulled in the last. So our credit reports are the last 999 days. So what is that? 2.5 years, 3 years, something like that. So it tells you literally every single date and who pulled your credit. So where you applied for credit. So it's important to not just go out willy-nilly and apply for credit cards because that will in turn affect your credit in an adverse way. Especially if you apply for a credit card and you get approved, and all of a sudden you have 5 or 6 credit cards out there that you don't know about, and you're not using them. So just be careful on that. And then another thing that we look at is types of credit in use. And that's where I was talking about your revolving lines of credit, which are your charge cards and personal lines of credit, and your mortgage loans, your installment loans, or any unsecured loans. So having a diversity in types of credit that you have out there is also important. I know I talk kind of fast, but I kind of made it a short slide because I made it a short slideshow because I'm more of a guy that likes to take questions and go from there, kind of elaborate on questions. So I guess I'll open it up to questions, Stacy.
That sounds awesome. So if you guys have any questions, you can either unmute yourself or you can go ahead and put them in the chat. We'll give you a little bit of time to see if you guys do have any questions. In the meantime, Jeremiah, you see a lot of commercials and stuff about credit cards that have reward programs and things like that. So do you have any kind of opinion on whether getting those kinds of cards is a good idea and reaping some of those benefits, or if it's a bad idea, or any kind of tips about those kinds of things?
Yes, absolutely. So I think credit cards are a great thing if you know how to use them. That's the biggest thing. And the thing that these credit card companies really hope that you do is you use as much credit as you can without being able to pay them back. So that's why I say, don't get over that 30% and try to pay it off every month if you can. So I guess kind of touching on the rewards, I would absolutely recommend getting a credit card that offers rewards, because that is that you can turn that into maybe if you use it for a year and you have enough rewards to pay a monthly bill. I think that's a great thing, but don't get wrapped up in saying, don't get in the mindset of thinking, hey, everything I pay for needs to be on this credit card because it gives me rewards. Because I think that's where you really really toe a fine line and I guess get on a slippery slope. And if you get to a point where you're not able to pay a credit card at the end of the month, that's when they start charging you interest. And if you can't pay it off the next month, you're paying even more interest because your balance just keeps going up and up. Mm-hmm. So I guess to answer your question, yes, get a credit card with the rewards if you can pay it off every month, and just be careful on getting in the mindset of charging everything on your credit card without being able to pay it off, because you know that your purchase offers rewards, if that makes sense.
Mm-hmm. Yep, absolutely. Very, very good. All right, looking in the chat, doesn't look like we have any additional questions right now. So I would encourage any of you guys, if you have additional questions. Oh, nope, we just got one. Okay. So as someone who has never had credit, what is the recommendation for my first step towards building a line of credit?
Yeah, so the first step in building your credit is, what I would recommend is getting either a loan or a credit card, and most of the time you're going to have a co-borrower, and that can come in form of anyone that's over the age of 18, but it's usually mom, dad, brother, sister, something like that, someone who already has established credit. And then they can extend a small line of credit, maybe $500 or $1,000 to you. That way you can start to show your repayment history. Now, if you don't have someone that could be a co-borrower for you, there is something that's called a cash secure credit card. And these are very interesting because what they are is, it's a secured line of credit where you have, let's just say $500. You have $500 and you send it to Capital One, let's say, and you request a $500 line of credit. So it's called a cash secured credit card. You send them $500. They give you a credit card where you can charge up to $500, and they hold on to your $500 in the event that you don't pay them back. So if you don't pay them back, they keep your $500. So that's just a way to start your credit and really show creditors or banks or other financial institutions that you are responsible enough to make your monthly payments. Mm-hmm. So those cash secure credit cards are offered through usually bigger banks like your Wells Fargo, US Bank, Chase, etc. Mm-hmm. Okay. We here at Security National Bank do not offer them.
Okay, next question. What's in your opinion the best bank to get a credit card for someone who's trying to start their credit?
Security National Bank.
Of course. And you can visit your friendly local Jeremiah Beck can probably help you with that as well.
I can. No, but I guess another shameless plug is we're always looking for customer service representatives, which are our tellers, our frontline staff. So if you're in college and you're looking for a good side gig, we are very flexible. So that's another shameless plug. But it's important to really weigh your options when you're looking for a credit card. So oftentimes when you're first starting out, it's kind of a matter of who will extend credit to you, because you don't have a credit history. But once you find someone that has extended credit to you, and once you build up your credit history, then it's going to be important to, like I said, weigh your options, look at different cards and what they offer. Some credit cards charge an annual fee, but usually if they charge an annual fee, they offer better rewards. So I guess you have to weigh the pros and cons to each credit card option and make a decision from there. But at the beginning, you're probably, if you don't have a co-borrower, you're probably going to end up going for a credit card over the internet, where you can literally look up on Google, apply for a credit card, and weigh your options there. Or like I said earlier, a cash secure credit card through one of the bigger box banks.
Mm-hmm. Awesome. Perfect. Okay, great. So give you just a minute while I finish up if there's any additional questions, but I do know Jeremiah is always very willing to chat with students, answer any kinds of questions. So if you would have any additional questions, or you would want to connect with Jeremiah, or you'd want to learn more about a career in banking or any of those kinds of things, just go ahead and get in contact with me, and I am happy to get you in contact with him as well.